Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 26th of October 2019. And whilst we've already produced our weekly update video published a few hours ago, and if you haven't listened to it, we've put a link below, we thought we would provide a brief addition to the video we produced earlier in the week entitled Gold versus Bonds in an Investment Portfolio, as there was some information perhaps either we missed out or did not emphasize enough due to a lack of time, as the video was running quite long. And now we think it appropriate to add to it. So here goes. Earlier this week, we produced a video entitled Gold versus Bonds in an Investment Portfolio, and we've placed a link in the description box below. In this video, we highlighted, perhaps for the first time, that institutional investors are now beginning to look at gold as opposed to or in addition to bond investments in a multi-asset investment portfolio, which we believe is significant for gold moving forward. However, on reviewing that video, we do not think we have painted a fair enough picture, in that investment managers are still, and probably will continue, to regard bonds, at least for the next 12 months, as an appropriate investment asset class. Let us explain, but first we quote the conclusion of our gold and bond video published earlier, quote, "If there is one message one can derive from this, and we have to bear in mind that not every asset manager or hedge fund manager or investment advisor is in total agreement, but one can now draw the conclusion that moving forward, despite the lack of yield, gold is now at last becoming a serious consideration in being included in a multi-asset portfolio, primarily for defensive reasons. But even if gold replaces a small percentage of those monies allocated to bonds, we shall indeed see an uplift in prices from current levels. Will this happen overnight? No. Funds and managers take time to move such assets, and frankly to be persuaded they're doing the right thing. No one wants to be managing an underperforming fund, but do not be surprised that over the coming months, and certainly the next few years, we shall see gold gaining in prominence." Unquote. Now, what perhaps we either missed, or maybe more to the point, because that video was becoming a little long, we neglected to cover the fact that all those involved in the investment community believes that not only is the interest rate trend down for the United States, but it is quite possible that by the end of 2020, the Fed funds rate will be 0% yet again, having moved down every month or 2 months in 0.25% tranches. Now, this is very important. Currently, 2-year treasuries are offering a yield of 1.63%, and 3-year treasuries are being offered at 1.62%, or 1.622 to be precise. Now, if, as investment managers believe, that interest rates will go down to 0, let's not even think about negative rates, though the Fed has indicated that it would prefer to do QE rather than have negative rates, then 1.63% starts to look attractive. Not only that, if they purchase those bonds now, and rates do go down to 0%, they will also achieve a capital gain, as they could sell those bonds before maturity. Now, many of you will ask, why would they bother for such a small percentage? Well, firstly, they are compelled to hold a certain level of risk-averse or very low-risk assets, especially when talking about portfolios worth hundreds of millions and billions of dollars. Government treasuries are arguably the safest investment, in that the whole economic and political system would have to crash for them to be worth nothing, particularly if you're talking about the United States. So such treasuries, whilst only providing a small yield and a small capital gain, if inflation is still only around 2% or less, they are at least providing security and maintaining investment buying power. Now, we've ignored the investment manager's charges at this stage. Now, that is to some degree better than equities, which they will already still be investing in with the bulk of their portfolio, which could fall by as much as 50% if the gloomiest picture or forecast materializes. Now, yes, gold and silver have a part to play, as we've already mentioned, but until rates do hit zero, and perhaps even then, so will government treasuries. Now, there are other bonds which will also be potentially attractive, and these are investment-grade blue-chip corporate bonds. Now, for example, Boeing and General Electric. They have strong balance sheets, and even if their equity price falls, these companies are still earning enough to fulfill their bond repayment requirements. And these will offer better yields than government treasuries. Slightly higher risk, of course, because it's easier for a company, no matter how big, to go bust than for a government the size of the US. But it will still form part of a multi-billion-dollar portfolio. Now, on top of this, with negative bond yields in Europe and Japan, US bonds by comparison look very attractive. And this too will support the movement of monies or cash from these areas into the United States. So, what are we saying here? Well, very briefly, we're not suggesting for 1 minute that any of us go out and buy treasuries or corporate bonds, unless you have a serious amount of money to invest in the tens or hundreds of millions of dollars. But equally, whilst we are of the opinion that gold is becoming more attractive, we must not naturally assume that bond buying is all but over. Short-term, and to some extent some longer-term bonds, may indeed prove attractive. And whilst we would all like to think that these hundreds of billions of dollars will move into gold and silver when equities have had their day, the reality is, whilst they will benefit significantly, and they will, at least for the next 12 months, they will still be competing to some degree with bonds at a serious level. And we just wanted you to be aware of that. Thank you for listening, and please do not forget to subscribe to this channel if you haven't already done so. And pop over to illuminatisilver.com and do join our inner sanctum, either as a free or paying member. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.